Hello, my name is Jonathan and this is Alexei, and we'll be discussing 4 different situations for ABC Corporation and how it will affect their financial reporting. First situation will be a large client which is filing for Chapter 11. Second situation will be an investment property being sold. A third would be shifting inventory management to LIFO. And then finally, water damage. First situation is where ABC Corporation has a major client filing for Chapter 11. This client constitutes about 10% of their revenue, so honestly, this is room for concern as this is a significant hit to their revenue stream. There can be no contact between ABC Corporation and the client as this will violate a number of laws. Things you should know is currently what are the accounts receivable from this client to understand what money is owed. And secondly, ABC should also reach out to find out the bankruptcy court what the case numbers are, so if they have to get in line to get paid. In a reporting perspective, from a 10Q, the risks should be documented in Section 1A for not having this revenue going forward. The statement of cash flow payments would also need to be received, would be documented. On the income statement, a subset or potentially all of the accounts receivable will be written off as a loss, and retained earnings will diminish over time to account for the lost revenue from this client. In terms of EPS, EPS will likely lower since the revenue will decrease, assuming 100% of all of the accounts receivable are not collected in the short term. And in the long term, it will cause a decrease as no new revenue will be coming in from this client. The projection of 69 would not likely be achieved if the situation was handled in a vacuum. And to offset the impact to the EBIT, we'd also need to understand and account for any costs of having this client, cost of goods sold, et cetera, that would help offset the 10% hit. The second situation is an investment property that's been sold. You need to understand a few things. First, the date of the sale to appropriately document the period that the revenue would hit the books. Secondly, we'd need to understand what the recurring revenue tied to this property is. And then finally, what is the cost to maintain this property? On the 10Q, the balance sheet where the land would no longer be there as an asset. Cash flows, the influx of cash from the sale would also be noted. In the document, it should be disclosed that this is a one-time event and any special treatment would need to occur since this recurring revenue would not be in place going forward. On the income statement, this would appear in the sales revenue section. And second, in the tax will be accounted for in the tax expense section. EPS, since this is a one-time event, will actually create an increase in the period where this transaction occurs. In subsequent periods, since the recurring revenue from this investment property will no longer be in place, there will likely be a negative impact on EPS. However, if the cost of the land, maintaining the land, exceeds the recurring revenue associated with the property, we'll have potential for positive results on EPS. The couple options you would have would be one, to determine the cost of maintaining the property versus the revenue tied to it, because that may or may not help or hurt your EPS. And secondly, if the revenue is required, alternate investment properties could be purchased. Turn it over to Alexei, who will go over the third and fourth options for us.
The third situation that is brought to our attention is shifting to the LIFO inventory method. But before we discuss the benefits of changing to the LIFO inventory method, we need to gather information that will help create the financial documents. We need to get the information from ABC Corp as to why the LIFO method is being used, because the IRS requires that this method be used only for reporting purposes when it is used for the income tax purposes. A benefit for using the LIFO inventory method may be because the assumption that the cost of inventory increases over the time, especially during times of inflating prices. This will then increase cost of goods sold in the income statement. That will also decrease net income. ABC will then defer its recognition of income taxes. US GAAP requires companies that use LIFO must disclose its financial notes in the quarterly 10Q. The amount of LIFO reserve or the amount that would have been reported if they were using the FIFO method. ABC's CFO and president might ask, what impact does this have on our EPS since the quarter end is near? The changing of the method results in a 7-cent increase to net income. This causes your EPS to increase as well, because the EPS formula is net income minus preferred dividends divided by weighted average shares outstanding. For the fourth situation that is brought to our attention is significant water damage to our finished goods. First thing ABC Corp should do is they should inspect the entire inventory to see how much damaged goods there are. Then you need to write off the damaged goods. GAAP requires companies to write off the value of the damaged inventory almost shortly after the loss occurs. Since this happened 3 times in the past 6 years for ABC Corp, ABC might have a contra account already set up for the situation if it ever happens again. You would then offset the inventory asset account with the contra account, or you could offset it by using the inventory reserve account. How will this affect ABC's quarterly income statement? Well, the amount of gains or losses or the net of income tax effect is separately reported on the income statement. Also, the net income is reported before and after these losses. This will reduce net income and furthermore reduce EPS. This isn't an optimal situation for the president and the CFO of ABC Corp, but we can't stop Mother Nature. This is happening 4 times in the past 6 years for ABC Corp, and it's very unusual. What ABC Corp can do is fix the current warehouse they have right now and make sure that this situation doesn't happen again, or they could go out and look for a better warehouse to keep their finished goods. Conclusion, considering all the 4 situations that we talked about, we still think the projection of the EPS will still be met. With situation 1, one of our major clients declaring Chapter 11 bankruptcy, this will increase in inventory. Or situation 2, the sale of land, this will increase the profit by 5 cents. Or situation 3, shifting to LIFO, that will result in an increase in net income by 7 cents. Or last, the damaged goods. ABC incurs a 6 cents loss. Unless the inspection of the damaged goods is more than we initially expected, we still believe that our EPS will reach the analyst projections of 69 cents per share for this quarter. And that is our presentation. Thank you and good evening.